down from 14.5% in February, and that's representing a 0.2% decline. Well, according to the Deputy Government Statistician, Ba Wadia, the decline is as a result of a base drift effect brought by the decline in the mining and quarrying subsectors, as well as the utilities and the appreciation of the value of the local currency.
Price inflation or index PPI measures the average change over time in the prices received by domestic producers for the production of their goods and services. The producer price index for the month of March stood at 14.3%, a 0.2% decline from 14.5% in February.
The decrease in the inflation rate in the mining and quarrying subsector and the utilities subsector. For the mining and quarrying, the decrease in the inflation was due more to a base drift effect. And for the utilities, the slight decrease in the inflation from 43.9% in February to 43.4% in March was a result of the appreciation in the value of the cedi, and this affected electricity exports.
The implication is that government revenue is likely to decrease from taxation as prices of commodities also fall.
Generally, the decrease implies that they are receiving slightly less in terms of cedis than what they received previously.
The utilities subsector recorded the highest year-on-year producer price inflation rate of 43.4%, followed by the manufacturing subsector with 10.1%. The mining and quarrying subsector recorded the lowest year-on-year inflation rate of 6.9%. The figures for the month of March 2016 are provisional and are subject to revision when additional data becomes available.
In other news, civil society group the Third World Network is demanding full disclosure of government stability agreement with Goldfields Ghana. The group says government committed an illegality when it approved the new development agreements, which will see corporate income tax reduced from 35% to 32.5% and royalties from a flat rate of 5% to a sliding scale starting from 3%. On March 29, Goldfields announced in Johannesburg that it had concluded development agreement with the government of Ghana, reducing corporate tax in respect of its Takwa and Damine mines from a rate of 35% to 32.5% and royalties from a flat rate of 5% to a sliding scale starting from 3%. The company estimates that this would save it $26 million in tax and royalty payments this year. But Executive Director of the Third World Network, Yal Graham, says the deal is illegal.
The Newmont agreement was originally signed when royalty rates were 3%. So you find that the stability agreement they got was around the figure of 3%. In the renegotiated agreement, that 3 understandably is the starting point of the revision. So it's been revised and they've been given a sliding scale of 3 to 5%. So anybody who was around, who got an agreement at that time, like Anglo Gold, Ashanti did, also got 3%. But anybody getting a stability agreement in 2016 would start from 5%.
According to Goldfields' announcement, the development agreement will last for 11 years for Takwa and 9 years for Damine, with the option to renew for another 5 years. The reduction of the corporate tax took effect from March 17, the date Parliament approved the agreement. The change in the royalty rate from a flat 5% of revenue to a sliding scale royalty based on the gold price takes effect from January 1, 2017. But the group is demanding full disclosure of the agreement.
All that has been said so far points to the fact that there are some. Is it because they've been around since 2004? Is it because they are threatened, by dropping prices? Different justifications have been given. Now, none of those are valid in law. So we need to get the document to know what it is. If it turns out that our fears are confirmed, then we think we would have to move to make sure that the laws of this country, are upheld.
In other stories, GOIL's announcement of its upcoming rights issue have driven investor interest in the equity, leading to price appreciation. The share price of GOIL increased by 1.37%, closing the week at 1 cedi 48 pesewas.
GOIL will undertake a rights offer of 139,639,640 ordinary shares at 1 cedi 24 pesos per share to qualifying shareholders. Only shareholders on GOIL registered by April 27, 2016 will be entitled to exercise their rights under the offer from May 3 to 18, 2016.
They are raising this money for expansion in their business, and we think that this is a good time for them to expand and then increase their market share in the oil marketing sector.
Mechanical Lloyd Company has also announced a dividend of 3 pesos per share to shareholders. Its full-year financial results indicate it obtained a revenue growth of 53% and a 351% increase in net profit.
A large portion of the profits came from the disposal of assets. Now, if there's not a turnaround in their operating activity to bring up operating profit, then it means that this performance very likely will not be repeated next year.
That's all for business news.